Hey, what's going on, everybody? Welcome back. I've got another update here on my dividend investing portfolio. So if you're new to the channel, I'm a Canadian investor just documenting my journey with dividend investing. So far, all of the stocks that I hold are on the Toronto Stock Exchange, and I'm just giving updates every week or sometimes twice a week on just how the progress is going. So I've been going for about 7.5 months now, I think, and so far things are looking pretty good. I've got a stock value in the account right now of $15,860, and that's great because I've put in $14,300, so basically I'm up about $1,850 or almost 13%. When we look at how many dividends I've received each month, you can add up all of these and you're going to see that the total's to $174. And so that makes up about 10% of my total gains, and the other 90% has come from the recovery in stock prices since last year. The average yield of my portfolio right now is sitting at 3.9. I'm going to try to push that up a little bit today and see if we can bump that to like 3.91 or something. I would love to get this towards 4% if possible, but that's pretty high considering if you do keep some dividend growth stocks in the portfolio as well and not just shoot for high yield all the time. But you'll see in this video, because I'm going to buy some stocks later, that I think in the short term, some of the biggest gains that I'm anticipating will come from stocks that have a high yield anyways. And so I'm going to try and double up on that and see how we can do. But yeah, if you basically take this 3.9% of the total account balance, then that works out to about $619 in dividend income annually, and just divide that by 12 and you're looking at about $51.50 per month. So yeah, hopefully we can keep incrementing this, and just by making deposits and reinvesting all of the dividends as they come, slowly keep this climbing every single week and just keep growing this until, I don't know. I don't really have an exact target that I'm shooting for, but just I think in this case bigger is better. What I am trying to do is reduce this part of the pie for utilities. I was going crazy. Let's actually take a look in here. At the portfolio. So I have the portfolio right now filtered to have the percent of holdings that's the greatest, and a lot of these ones up here are utility companies because in the last few weeks they've been presenting themselves with pretty good opportunities. But today I'm going to be looking at a few other stocks. I see down here the only one that I have in the red today is Bird Construction, but they're only down 0.1%. So if they're going to fall, I think I'm going to wait a little bit longer to see if that's going to drop significantly. Let's take a quick look at their chart. The 5-year chart. So they've been on the decline for the last 5 years, basically since the pandemic. They've been climbing up a little bit, and if we could kind of max this out, we can see how far it'll go. Yeah, they've been on a pretty big downward trend. So just in case it does continue downward, I'm just going to wait because I'm not assuming it's just like going to rebound, completely up to what it was like years ago. So we're going to hold off on that for a minute. But I was looking here at Exchange Income Corporation. I think I might just pick up one share of these guys, because if we come in, let's set this to 5 years so it doesn't blow up the computer, and maybe look for EIF. We can see here they've been doing all right. They had a strong recovery and just a little small dip here, and they still haven't hit their the pre-COVID numbers here. Again, this is not really a real indication that you should be using, but just you can see here it's got a bit of a ceiling and we quite haven't reached that yet. So I think I'll just drop one more share in here while it's just down a little bit. And they've got a pretty strong dividend of 5.86% anyways, which, if this does continue to fall, that's fine. I'm just going to sit on that dividend and take those payments. And then otherwise, I'm looking at trying to increase some of these positions that are in basically the bottom half of my account. And I'm looking here at H&R Real Estate, and also REI.UN is just out of the bottom half, but I might pick up some of those today too. So if we look here at the chart for REI.UN, looking at the 5-year chart here, again, we still have plenty of room for recovery and a pretty strong dividend of 4.75%. This one was cut, and I'm hoping that at some point when it does recover, they'll bump it up again, because I think they cut it by 30% or 25%. I can't remember what it was, but it was pretty significant. And then when we look here at HR.UN, this one here has, I think, still a very long way to go to recover, and that's for me, I think is good. If it can manage to come back up in the next year or something, then I'm looking at some pretty solid returns just on the stock price, and then also this yield is just very strong anyways. So let's jump into Wealthsimple Trade, and this is the broker that I use in Canada to buy and sell stocks. Super great platform, no trading fees whatsoever. You would pay commission if you're buying US stocks, but like I said, everything in my portfolio is Canadian dollars on the Toronto Stock Exchange, and so I'm not paying any fees whatsoever to use this platform, and I really like it. It's really easy to use, and yeah, definitely recommend it. There's a link in the description below if you'd like to try it for yourself. But let's get started here. I wanted to pick up REI.UN first, REI.UN. I think with these guys, I'm going to try to boost this by about $100. So I'll be looking to take 5, and I'll just go with a market buy for these. That'll be enough. So we'll just place that order. All right, cool. That's a market buy. And then H&R Real Estate. That's HR.UN. And these guys, I want to pick up, I think I'll take about 10 of these. So let's try and type that in. So that'll be about 147. It's going to be most of what I have left. Again, looking for this hopeful recovery. You never know, but hopefully it comes back. So far I've been doing all right with it. So take that one on a market buy as well. And then just with the last little bit here, let's take EIF, Exchange Income. And I should have enough here just for one share. I'm going to take that at a market buy as well. So we'll place that order. And once that's all done, that's great. We can jump back into Google Sheets and go log these buys in the transactions tab. So I'm just going to come in here and just double check what I actually paid for them using the market buy in Wealthsimple Trade and the notifications, and then just drop in those values here. And once all of those in, I'll just double check what's going on in the summary page, mostly looking here at how much the annual dividend income has increased. So before it was about $619. Now it's almost $633. So that's like around a $13 increase in my annual dividend income. And that's looking, when you divide that by 12, we're up to $52.73 approximately per month. So that's awesome. That's passive income, tax-free, that I'm just reinvesting back into these, getting that compounding effect going forward. And with every deposit, this number is slowly growing little bit by bit. And just after a couple months here, like this is starting to be like pretty significant money for me. I can pay off certain things. I can pay for my phone bill and stuff like that with this if I wanted to, but I'm just going to keep investing it back into the stocks for now until I really need to start withdrawing this in the future. So guys, thanks for watching. Hope you really enjoyed the video. If you do, leave a comment and smash that like button, and I will see you in the next one.